All right. We are live. YouTube question and answer Monday. We've got the man, the myth, the legend, Amer Bally. Before we jump into it, man, thanks for joining us. And maybe, for folks who don't know your GOAT status, your legend status, just tell us about where you're at, what you're up to.
Yeah, well, first and foremost, Matt, thank you so much for having me on here, man. I know you got like 100,000 subscribers, so I can only imagine how many people are watching this thing right now. But no, I appreciate you a ton. It's very humbling that you have me on this. So thank you so much for giving me the opportunity, just having me here. A little bit about me. So I am a mortgage broker here in the state of Michigan. We're both powered by the same company. We're both powered by U Mortgage. I had the privilege of becoming the #1 loan officer here in the entire state last year, closing over $250 million in volume. So it was a great ride. It was a great time. But I owe it to my referral partners, to the people that trust me, the people that send me business every single day, to my clients. A lot of my business, probably 60% of my business, came from past clients, right? Referring me more clients. So everything that we provide, all the services that we provide, it's like, listen, if I'm going to talk to you about a mortgage, man, I'm going to talk to you like you're my best friend. You don't even know me. You have no idea who the hell I am, but I'm going to talk to you like you're my best friend. That's how I'm going to earn your business. I'm not going to sell you some BS. No, I'm going to talk to you like you're my best friend. And I'm going to tell you, hey, listen, if I was in your position, this is the mortgage I would do. And that it reciprocates on the clients, and the clients love it. So that's a little bit about us, man. And like I said, I appreciate you for having me on here. I'm cool to shoot the stuff with you for about an hour, man. It's gonna be exciting.
Yeah, and I think I truth be told, like the feedback I get in my gut tells me that the most value we can provide for people listening and for the consumer is like, hey, listen, this is Amer Bally and his team out in Michigan closing 400, 500 purchase deals every single year. I'm talking to hundreds of consumers day in, day out, all month, talking to dozens of real estate agents, watching offers go out, watching offers get accepted, watching offers not get accepted. You talked about your market in Michigan. We talked offline. I know how my market is in California. We're both, referring out deals in every state in the whole US. So we know how hard it is. And I think that just by sheer repetition, by just doing as many deals as we do, we get to see a lot. And that's like the whole goal of my channel is I want folks to like hear it from me, myself. Hey, listen, I'm not telling you I've got some theory. I'm not telling you that like, this is, something I learned in business school. I'm telling you that yesterday somebody put in an offer. This is what they did that helped them stand out. I'm telling you that last week, this is what I saw 5 or 6 different agents to do. It's a best practice. It's something that's working in today's market. Right. And sharing that with people is going to be more valuable than, anything else we can do. So I think that, maybe a starting point is talking about, your market, what's going on. I'd love to hear too, like we didn't script none of this stuff. I would love to hear from you specifically. What are you seeing work to get people's offers accepted? Because I know in my market, it is tough. You're up against 12, 15, 20 offers. Like what are people writing in their offers? How are the agents presenting them? What are they doing to get something accepted?
Oh yeah, that's a great question. So I already know California is one of the most competitive markets in the entire country, but here in Michigan, it's tough, man. Like what these realtors are doing now is, they're putting these homes on the market on like Zillow as like coming soon, right? And they're putting them on Zillow as like coming soon. And it says, oh, coming soon in 3 days. On the third day, it's already sold. They didn't even get to come to the market. It's already sold. There's 40, 50, 60 offers at a time on a home. Sometimes they'll put in the little bio on the home when they're listing it on the market. They'll say, if you're not offering $30,000 above asking, don't even waste your time. Like it'll say that in there. And it's like, well, shit, you might as well just like put the price of the home $30,000 higher. What's helping the clients win? Truthfully, what's helping the clients win, and mind you, to the thousands of people that watch this, like what's helping the consumers win? The reasoning is not me trying to sell Matt, the mortgage guy, not me trying to sell you mortgage. It's not me trying to sell anything at all. It's just all real. When you're getting a pre-approval on a home, it's like you're a consumer. You're trying to get pre-approved for a home. It's like, are you getting fully underwritten, right? Are all your bank statements, your pay stubs, your W-2s, your tax returns, is everything being collected up front? Do you have an underwritten file? Because if I have everything up front, that means I can close that loan in 15 days. The average cash transaction closes in 12. So it's like, hey, Mr. Realtor, yeah, your highest offer is $30,000 over asking, but I'm going to give you $20,000 over asking, but I'm going to close it in the same amount of time that I'll close in cash, right? I'll give you a non-refundable deposit. I'll give you an EMD for 10 grand. So we're like, if my lender is just blowing smoke, you can take that $10,000 from me. It's like, I'm giving you this kind of offer. And we call the listing agents, we gas up our clients, we tell them how good they are, how properly qualified they are, and that's how they're winning. But you get these big box retail lenders. I don't know if I'm allowed to like drop names on this stuff, but like we get these big box retail lenders that are just right next door to me. And it's like,
we can talk shit about Quicken on my channel.
All right, perfect. Yeah, to hell with Quicken Loans. But it's like you get these big box companies like Quicken Loans. Like these guys don't know what they're doing. The client's calling, hey, I need to get a pre-approval. Perfect. How much do you make a year? Oh, 50 grand. Perfect. Here's $100,000, $1,000 pre-approval letter. It's like, what? That thing's not closing. So that's how we're winning these offers, right? And I can only imagine it's the same way over there by you in Sacramento.
Yeah, I mean, that's the thing too, is I tell people is that sellers want certainty. When sellers are selling a home in a market like this market, they know they're going to sell it. They know they're going to sell it at a premium. So our job as loan officers and then the buy agent on the buy side is to basically relay the information to the seller. In us, you've got this great offer, and as important as a great offer, some certainty that it's going to close, right? I just talked to somebody who was trying to pick up a fumble from better.com, and better.com had basically offered a pre-approval on a self-employed borrower without tax returns. If people who are not in the mortgage industry might not know how big of a sin that is, but for somebody like me and Amer, like Amer spoke about getting a full file, having it underwritten, having the funds sourced, like we've got bank statements, we've got everything verified. We've done verification of employment. We know what the income numbers are going to be. All that stuff is done. And truth be told, like I don't get as much pushback as I used to. I tell clients, this is all for you. This is all to make sure that you're buttoned up tight, the dotting the I's and crossing the T's. Me and my team doing more work. We don't want to do it for fun, right? We're doing it so that one, when we submit an offer, we know that we're going to be able to close it for you. You're not going to waste money on inspections and appraisal and all the other stuff. But two, when I call the list side, is that you beeping, man? People are just trying to hit you about getting pre-approved.
My phone just goes off all day. I'm sorry.
Yeah. You don't have a do not disturb button, bro?
I'm sorry. Hold on. Let me try.
No, you're all right. But, like that's what we're trying to do, is team up with the buy side to basically present an offer that provides certainty to the seller, because I know for certain I've got stuff accepted at 450 where they had offers up to 460 because they knew we were going to close. They had some certainty we're going to close. They relay that to their seller. Hey, Mr. and Mrs. Seller, do you want 460 might happen, or do you want 450 will happen? right? And you get a pre-approval from me and my team, you talk to me directly, rest assured. I have bled out of my eyeballs to create the great reputation I have. I'm not going to go ruin it now, right? When I tell you it's going to close, I've got a full file, like we're getting to the finish line.
Can you tell us, excuse me for questioning you on your podcast, but can you tell us about where, I want to know about you, because like I met you I had the privilege of meeting you in Vegas for AIM. I had the privilege of meeting you there. And then who was to know that 2 months later we'd be on the same team? It'd be my honor to be on your team. I want to know about you. Where did you come from? And like, how did you become so successful in what it is that you do? Like, how did you build your brand? I'm curious to know, if you don't mind me asking.
Yeah, for sure, man. Like, I don't think we ever talked about this, but when I always had a passion for numbers, always had a passion for people. Graduated from college in 2005, and I went off and ran a small business where I really got to kind of pursue those passions. I was managing a poker room. So I was dealing with a bunch of people, wide variety of people. I was dealing with numbers because I was running the financials for that poker room. But after about 8 years of that, I realized like, I'm not going to be doing this when I'm 70, right? I'm not going to do this forever. And had a buddy approach me in 2013 and say, man, like with the network you have, with your ability to talk to people, with your kind of business sense, you'd be great at mortgage. And in 2013, you've talked about it, I'm sure before, like going all in on something. Like I burned the boats, man. I had just had my second child. And so I was literally like going from, a sure thing to a commission-based job where if you don't do well, you don't eat. And went out there and just hustled my face off, to be completely honest. I told some new loan officers recently, I was going to 2 or 3 networking meetings every single week. Some of these meetings were just an absolute waste of time, but out of some of them came relationships where I've closed 60 deals for real estate investment partners, and they've referred over their cousins and other folks. And so from 2014 to today, just networking like crazy and doing my best to serve people. A true story is I bought a house in 2006. I got into a loan, which was at 80% first, 20% second, interest only, like neg, AM loan. It was some nasty loan, right? And those are more common.
You were in this
that
loan, right?
I personally got in with a finance degree, right? Because I didn't know any better. I'm like, okay, I'm managing a card room. I don't show a lot on paper. I'll do this, stated income loan. And I got to the closing table. Not a lot of people have heard this story, Amer, but I was crying. I was crying, dude, because like there was $15,000, $16,000 in fees I didn't know about. And, granted that was a different time, but that stuck with me to where now in my business, I'm doing my best to do right by people, to serve people at a high level. I would rather write a loan for free. I would rather lose money on a loan than mess with my reputation. Because like people are entrusting us with the biggest financial transaction of their life. I had a team meeting this morning. I talked about some plans we have for 2022. It's not about money anymore, dude. It's like I'm chasing impact. I'm not chasing income. And so I might have gone off on a tangent there, but that's the roundabout story to where like my passion for the consumer comes out. And this channel and everything I do, I think me and you are aligned in that way, where we're like, educating the consumer is the number one thing. If they choose to do business with us, great. But I can tell you, Amer, over years of putting out YouTube content, I know people that close loans all over the country, didn't use me, didn't use somebody I referred, but gained like value and it helped them to watch this stuff. So like the feel good I get back from that, I'm putting that in the bank, man. That's good.
Yeah. Stuff. Well, that's like, I don't know if you saw the private message, chasing impact, not income. That's we should quote that. We should quote that for Matt. We should quote
I think that's the new one.
That's
you know
huge.
what? I see a LO who's in California right here, and he wants to hear about your story, bro. So how did you get started and on your way to becoming number one in Michigan?
So first, Thomas, thank you so much for asking. So, it's humbling. So I used to work at United Wholesale Mortgage. I worked at UWM. I worked there as an account executive for about a year and a half. One day I got into a fight with one of my brokers, right? I was an AE. I was trying to earn their business. I got into a fight with my broker. I went out to lunch. I drank a couple glasses of wine, and I came back and I sat at my desk and I said, you know what? And I took my headset and I threw it at the screen. I said, I can do this for myself. So I left. A little background. I don't have much financial support, right? It's just me. I live alone, right? It's like not much family to have my back. It's just me. So I quit my job September 4th of 2018, and it was at that same day I started the Bally team. When I started the Bally team, I didn't close a loan for my first 6 months in the industry. So I was a licensed loan officer September 4th. I didn't close a loan for about 6 months. I didn't close any business because my sole focus, my sole purpose was I need to build a proper foundation upon which I can grow my business, right? So it's like, if I try to go and get business, try to go meet realtors, try to do all this, and then I got business coming in, I'm going to get 3-4 pre-approvals, close a couple loans, make a few $1,000s. And then it's like, oh, wow, this is nice. I take a step back. But it's like, I got to make myself hungry. Like, I got to be hungry. And I was starving. I was working at a liquor store on the weekends, open, close, Friday, Saturday, Sunday to pay for my Instagram ads, right? Like, because I had no money. I literally had no money when I quit. Then, I closed 2 loans. And the following month, I closed 4 loans. And I closed 6 loans. Then I closed 13 loans. And then in May, I closed like 2 loans. My business just dropped. And when my business dropped, I said, okay, I'm doing something wrong. I'm focusing on the business as it comes. So it's like, business comes, I'm busy. I don't focus on new business. It's like every day I need to focus on new business. So in the beginning of my career, I would listen to anybody that would want to hear me talk. So any person that would want to hear me talk, I'd listen to them. If the person wanted to sell me something, I'm going to meet with them. Like, we know, right? We get like sometimes like really good like insurance agents, title companies, all these people, financial advisors, they want to meet with us. They want to sit with us, to talk to us. Little do they know we're broke as hell, right? We have no money to invest, but it's like, if they want to meet with us. So I would sit with them and I would meet with them and I'd say, okay, well, they're trying to sell me. Well, I'm going to try to sell them too. That was my mindset. I'm going to try to sell them too. So I did that. And then also I had another philosophy when I first started, and I did my first 25 loans for absolutely free. So my first 25 loans I closed, I made $0 in commission. And what I would do is I would tell that consumer, I am making no money on you. There is no money. I actually make more money not doing your loan. But Mr. Client, I need you to tell 4 or 5 people about me. You are helping me grow my business, right? And they would. And Matt Ishbia has this philosophy that every client is worth $25,000, right? And where does that number come from? It comes from, well, if I close Matt Gauger, then I'm going to close his mother. I'm going to close his sister. I'm going to close his best friend. I'm going to close his coworker. Because I did so good for Matt. Matt is going to refer me 5 other people so I can make my commission. And eventually that grew and grew and grew. I'm closing on average about 50 to 60 loans a month right now. I couldn't do it if it wasn't for my team, right? My team is incredible. Business, of course, is slowing down right now, but my team is incredible. And it's all just about, you have to focus on the relationship. It's not about the transaction. And I can hit you with our core values, right? Matt, right? Relationships over transactions. I can hit you with all these, these core values, but it goes further than just a core value. It goes to reality. People don't want to be sold. Like, people don't want to be sold. People want to get something that, like, I'm getting a good mortgage. I'm getting a good deal. I'm getting a good product. That's what people want. So people don't want to be sold. Don't sell people. Earn their trust, earn their relation, earn their focus. That's what it is.
Yeah, I agree with all that stuff 100%. And I think that, like, when I talk to people are like, wow, I really appreciate that advice. I'm literally saying, hey, Susie, whoever the client is, like, here's what I would do if I was in your position. Mm-hmm. Or if you were my sister, here's the advice that I would give you based on everything I know and based on everything that I've seen, on the mortgage side. And, here's how I'd structure your loan. Here's what I do if I'm, trying to get your offer accepted moving forward. Whatever the case is, it's literally the relationship of, hey, I'm a mortgage professional. We're friends. Here's my advice to you. So that's great stuff. Manny, want to throw this up there because he gave me some love, and I appreciate it. Manny, appreciate you being here. Don't forget to like, comment, subscribe. That's what you say when you're on YouTube. If you haven't been on YouTube, Amer, it's you do something for the YouTube algorithm. I don't know. I got to be on. These young whippersnappers, they know it all.
My Instagram's popping off, but it's not like your YouTube. I'll tell you that. It's definitely not like that.
You gave me too much credit earlier with 100,000, but maybe you were thinking about next summer, because by next summer we'll be there, no doubt, man. I'm trying to hit them at all angles. I'm hitting them on TikTok, Instagram, Facebook, LinkedIn, wherever the heck there is to be heard. I'm gonna scream from the rooftops, and it's.
Sorry to cut you off. A reality is, if you want what you want, you have to give other people what they want, but for free. It's like you want success. It's like, well, then you're going to give people knowledge at absolutely no cost, right? And that's what we do, including yourself. That's what you do such a phenomenal job at.
Right, for sure. And I mean, this isn't like a loan officer coaching Q&A, but if it were, you add immense value to everyone you come across, whether that's a real estate agent referral partner, a CPA, a financial advisor, your network, anybody. You add value, expect nothing in return, and after a few years, like it's magic. Like the business comes rolling in. So we got something to celebrate, I think, on here. Ashanka, last time she was on here, she referenced Ryan. He was an appraiser I had on. She was waiting to see if her offer would be accepted, was worried about getting outbid, and magically her offer was accepted. So Ashanka, if I knew how to do like some confetti or balloons on the screen, like I wonder if you could do something like that. I bet you the young marketing team at U Mortgage knows how to do something like that. But congratulations to you. These are the type of success stories too. Like this stuff fills me up more than any commission check. So she said she agrees with you. One of the things that helped her being fully underwritten and approved, and getting her docs in order. As a consumer, this is a teachable moment for everybody. Don't be afraid to provide every single piece of documentation the loan officer is asking for. Don't be afraid to put in a bunch of work up front, because like Ashanka, I'm sorry if I mispronounced that, said is like she provided all this stuff up front. She was able to show the list side completely underwritten, approved. The lender's ready to go. If you're working with a great lender, that is what I'm going to lead the conversation with. When your agent puts in an offer and I tell them, make sure you CC me, my team knows I want to call the list side and say, hey, listen, I've got a full file. We don't send out those pre-approval letters for fun. This letter is telling you this thing's making it to the finish line. I can tell you they're W-2. We've confirmed the assets. We've got the verification of employment. We know, exactly what the underwriter's going to use as income. This thing's fully pre-approved. It's going to be a walk in the park. Me and my team don't run and hide. Like you can get a hold of us anytime there's a transaction. All that stuff gives the sell side certainty, increases your chances of getting accepted. If you don't think it's important, like I can assure you, in most markets across the country, it is as important as it's ever been to be able to present a strong offer to the list side if you want any chance of getting accepted.
I hope Ashanka went through a broker. I'm hoping, right?
I hope so. Well, our buddy Jose here is sharing that he's having a good experience refinancing with U Mortgage. Referred him to somebody great locally wherever he's at. I'm not sure where you're at, Jose, but I know that I've got great partners in Florida and Utah and Texas and all over the place. So wherever.
This is incredible. This is incredible. So you have people on here that are like, they worked with you and they come on here to show love to you. This is incredible.
They like and trust me, bro. And so we're taking good care of them. And rest assured, if I refer something to Dax in Texas, he's not taking care of business. I'm getting after him, bro. If Lucas isn't providing an A+ experience in Florida, they're in trouble. So Gilbert, Arizona.
Promise we're crushing it for you, Matt. I promise we're crushing it for you.
Yeah. You got stuff in Michigan, you let me know. It's the Bally team's taking care of it. The Bally team's going to do a great job. So Christy's on Facebook. She called you smart. She called you smart. Amer, this might be a first here. So smart. Ask for a specific amount of referrals. I'm sure asking you up. Because this is something too that's important for anybody who's in sales to think about. Is like, if you don't ask, people don't necessarily. That's not their first thought. Is like, Amer did such a great job. Him and his team were so great. They'll go home and feel really good about it. You just saying, listen, if there's anybody else that we can help, if 4 or 5 people that like we can help, it gets their brain thinking, because truth be told, you close a deal for somebody. Jose's had a great experience with U Mortgage. He's going to do right by his community. He's going to do right by his friends and family and coworkers by saying, hey, listen, don't gamble out there and just work with any old company. Contact U Mortgage. It's going to be a great experience. Like that's something that, his friends and coworkers are going to come back and thank him for later.
Yeah, exactly.
Who else we got in here? Kevin Hawthorne. Thanks for joining. Kevin. Jordan Carr. Yeah, Kevin's a good dude. Kevin does. I'm almost positive he's in Florida. He sent me a couple emails. He works as like a volunteer for the like public transportation system there. Cool dude. So Thanks for joining, man. I appreciate it. Like, these people are taking time out of their day to come hang out with us, man. I love it.
This is awesome. I'm almost thinking I'm so behind right now.
Keep driving until you qualify.
Just saying.
Well, that's one way to go about it.
Keep driving until you qualify.
I don't know if this is talking about starting a business, to start buying a house, whatever it is, Terry, I'm with it. Keep driving until you qualify. That's good stuff, man. Cool. Yeah, we'll wait for some more questions.
Matt, how long have you been? How long have you been doing this for? This your YouTube channel? Like, you've had it for a while now.
I've had the YouTube channel for like 5 or 6 years. The lives that we've been doing I've probably been doing that 4 or 5 months. Where, like, today's a holiday. Today's a President's Day. Happy President's Day. I don't know if, we'll get 50, 60 people joining live on here. And I know for certain, like I tell people too, come on live, ask your questions live. Google is great, but Google might give you the 2018 answer, right? I'm trying to give you the 2022 answer because that's the one that's, what my vision is, Amer, and it's funny we're having this conversation out loud in front of the universe, is that I'm going to grow a big enough operation where we're going to have, 500 people in process at once. You could come on here live and you don't have to necessarily like tell somebody that you're in process, but you could like talk live about questions you're having about, what you're doing in process, because certainly people do that are working with different folks. They're in contract on a new build in a different state or whatnot. But are you seeing a lot of
in Sacramento? In Sacramento, is there a lot of new constructions right now?
Yeah, there is. There's certainly all kinds of new construction. I made a video, a little controversial, where I talked about the 3 reasons not to buy new construction. Because I speak the truth, man, like it or love it, man. I'm going to tell you what I feel. I've got construction buddies that are like, dude, if you saw some of the stuff they're putting in these new construction homes, it is absolute trash. Right. And so
true. These people that are getting these new construction homes, it's like they're settling because they're like they're sick of looking for homes and not finding anything they like. But you're paying top dollar for this new construction home, hundreds of thousands of dollars over. You don't get a porch, you don't get a deck, you don't get any appliances. You get robbed by the builder's in-house lender. And I'll say that publicly. Every builder in America, I don't care who they are, if you go to their in-house lender, you're probably going to get robbed. You're 80% certain you're getting robbed. I'm sorry, like, shoot me. But like, they're overcharging you. And it's like, why? I mean, why? How are they robbing me? They're giving me $5,000 in credits, right? Well, here, let me give you an example. If here at U Mortgage, we're charging you $0 in origination fees and giving you $0 in credits, we're at $0. But if you go to ABC Builder New Construction Home Loans, right, and they're giving you a $5,000 lender credit, but they're charging you $7,000 in origination fees, you're negative $2,000. So it's like, who's better? The company that's not giving you any credits is better, right? It's like, that's it. And of course, these builders, they have the title companies, they have the insurance companies, they have the lender, they have the builder. They're going to try to get money from all angles, right? It's like, if they're going to rob your realtor, they're for sure going to rob you too. That's just my take on it. It's like,
right. And the funny part is,
I'm not saying all new builds are wrong. In some cases, it's your, like, you want to get a new home, you want to buy a new home. Like, God bless you. I'm certain you're going to crush. Like, that's what you want. Good for you. But it's like, do your due diligence, because finding that new home from 2015 that's fully furnished, fully renovated, ready to go, and it's $100,000 less than that new construction, it might just be worth it. 5 years old, you still got a brand new roof, brand new furnace, brand new hot water heater, brand new carpet, wood. You're golden. You're golden.
Right. Yeah. And not all builders are created equal. There's some that are doing a great job. There's some, they're building these smaller communities that are doing great. But to your point, like, it's funny how it's like totally different state, but it's the same thing. Like, 0 lot line. You can reach out and high five your neighbors. You guys both take a shower. The backyard is, 6 feet deep. Like, it's not for everybody. Right. And when I start to see, like, you've got 9 months and you can't lock your loan, the whole builder's lender thing is funny. I've got videos on my channel about that, where I tell people, listen, get the loan estimate and show it to me, because if you have $9,500 more in costs, but a $5,000 credit, that's a $4,500 L that you're taking for the builder's lender,
Right.
because the builder owns the lender in more than half of the things I see. Lennar Homes owns Lennar Mortgage, and other big builders, they own the mortgage company. And so, you know, if you go to Kohl's and it says $99, but it's 50% off for $49, but I've got the thing on Amazon for $34, I'm better at $34. Just because it's half off or it's, you know, lender credit doesn't mean it's a better deal. So
they're still winning with us. And then also it's like something I mentioned to all of my clients. Every single time we talk to our clients, every time we say something, I say, Mr. and Mrs. Client, I don't make money to not do your loan. Like, I need to close your loan. I need to do a good job, and I need to ask you for more referrals. There's no like, oh, I'm just going to get it closed and I do a horrible job. Like, no. You and I, Matt, if tomorrow we get no more referrals, you know what that means? We make no more income. Right? It's like,
right. Yeah. I'm not in a call center with the phones ringing out. Right. And like, I tell people too, like, if you go online and, you know, between Yelp and Google and like everywhere, positive reviews, like, I can't screw that up. I've invested too much to go start, you know, screwing people over now. So like, you know, if you are going to work with a mortgage professional who has no reputation to protect, i.e. some, you know, call center mortgage person or somebody where you Google their name, comma, mortgage, and they don't show up anywhere, like, they don't have to do right by you. They don't have to make good on their promises. They've got no reputation to protect. If I screw somebody over, I am tanked, right? Like, all that hard work, all that stuff, it's all for naught.
Okay. I'm on my Google page right now. I'm just under 700 Google reviews, right?
I think I have like, what are you doing for that, dude?
I'll ask for the referral. We have this
ask for it.
Ask for the reviews. We ask for the Google reviews. There's a few things that we do, you know, to any loan officers that are potentially watching this as well, where a lot of clients love the fact that we show our gratitude. It's something that we train our team on. At least I train my team on every single phone call, every single interaction they make with a client. I say, you have to thank the client 3 times in every interaction. You thank them, hey, Matt, thank you so much for taking the time to talk to me on the phone today. You go into it. At the end of the call, hey, Matt, thank you again so much for taking the time to talk to me today or even trusting me with your business. It really, really means a lot. Hang up. Shoot them a follow-up text. Hey, Matt, once again, man, it really means a lot. My name is Amer Bally. If you need anything, this is my cell phone number. Right? Thank them 3 times. Ask them for that Google review. Hey, Mr. Klein, I got your loan CTC'd in 5 days. It's like, ask for that Google review. Like, right there. That's perfect. You know, don't wait until it gets to the funding. Ask for it right there, because that's when they're the most ecstatic. They just got to clear to close on a home, you know? We have excuse me for talking a lot. We have this analogy in my office. I don't know. Have you ever heard of like the restaurant analogy in terms of like closing? Have you ever heard? I
think I've heard you talk about it where, you know, yeah, it was either a podcast that I heard of yours or whatnot. It's a good one. Give us the 2-minute version, because it's a good one.
Yeah. So imagine you walk into like the #1 steakhouse in Sacramento, right? You walk in, you and your wife. Atmosphere is great. The vibe is great. You walk into the hostess counter. They say, hey, Mr. Gauger, it's nice seeing you. Your reservation is ready. They take your jacket off, your white's jacket off. They just go, they hang it. You sit down at the table. You have 2 waiters. One's putting your spoons, forks. Another one's pouring your water, right? The vibe is great. The aesthetics are incredible. Waiter comes. You order your appetizer, your steaks, your dessert. You order everything. Everything is incredible. You're having the best service, right? Then it's like, okay, well, now you're done eating. You're done eating, and your water hasn't been filled, or you haven't had another drink in 15 minutes, or your empty plates are still sitting in front of you. And it's like another 10 minutes go by, and it's like, all right, well, we're trying to leave now. We've been sitting here for 25 minutes. You look for your waiter, you can't find your waiter anymore, right? It's like, okay, well, then you find another waiter. Hey, excuse me, can you find my waiter for me? Sure, they go and find the waiter. Then the waiter comes 10 minutes later. Hey, listen, we're just trying to pay and leave, you know? Give them the credit card. 15 minutes later, then they come back. It's like, man, it's like everything just went slow. You walk out, they hand you your jacket, and you leave. You and your wife are going to sit in that car, and the first thing you're going to say is you're going to say, man, that service was horrible, right? But it's like you totally forgot about how incredible it was when you first got in. You only remembered the ending. So how I teach my team, or how I teach anybody in the industry when they ask for these coaching calls, is I say, nobody cares that you got the loan clear to close in 7 days if you completely botched the closing, right? Nobody cares that you answered every single phone call if when the final package comes out, you're nowhere to be found. Nobody cares about all that, right? It's like you got to nail the closing process. That's the most important part of every transaction, because once again, it's like you didn't care that they took your jacket the moment you walked in. You're not going to care about that 5-day CTC. You know, that's my restaurant analogy, where it's the closing process is the most important process of any transaction. If you're selling insurance, mortgages, cars, shampoo, whatever you're selling, the closing process is the most important part, hands down.
Right. No, I agree 1,000%. And that's the thing too, is like, you know, real estate, mortgage, it's not always perfect. There's going to be bumps along the road. You know, a great team like Amer's, I really like, you know, pride myself on having a great team and give a lot of kudos to my team, because truth be told, I'm just a small piece in this, you know, larger equation, which is a great team with, you know, great processes in place and all aligned to serve folks at a high level. We're looking to make sure that they get to the end of this thing. Not many people line up and are super excited, like, I can't wait to get a mortgage, right? Like they need to get the mortgage because they love the house, right? They want to live near the school they want to send their kids to, or they want to live 2 blocks away from their, you know, parents, or they want to, you know, move next to their sister, whatever the case may be, right? It's the house they care about. The mortgage is something just in the way. And so like you're spot on that. Like if you don't nail that closing process, you know, you could have done 55 things perfect leading up to it, and that's all they're going to remember. And in turn, that's all they're going to remember about the whole experience. Your realtor referral partner is going to get less referrals because of it, right? And I think that like this segues into Thomas's question about getting realtor partners. And if you're a consumer on here and we're spending some time on loan officer questions, I apologize, but there's loan officers that are watching and want to get some insight into some of this stuff, which I think is valuable. It's valuable for consumers to know how we're thinking too. But, you know, for me, Thomas, it's all about adding value in whatever way I can. If realtor partners knew how much it increases their business and their future referral business by working with a great lending team with a predictable experience, they would seek out lenders. They truly would, because I can show you a clear difference between a real estate professional who's aligned with us as a team. We're helping them get more business. Their client experience is better. They're getting more referrals. They have a predictable experience where they refer somebody. They know we're going to follow up. They know we're going to provide them great service. We know the pre-approval means something. They know that when they CC us on an offer, we're going to reach out and help them get an offer accepted. All that stuff they know, right? Versus guessing, hoping, praying that it's going to be a good lending experience and it's not going to tarnish your name as a realtor. Because here's something that realtors should be aware of. Your client has a really bad mortgage experience. You could be the best realtor who negotiated the very best purchase of all time. If it's a bad experience on the lending side, you are much less likely to get referrals. So the client experience for that mortgage is important. You should care about it, right? And so the realtors that I see that are doing the best job are aligned with a lender, whether it's us or not, that they're referring business to by telling their client, trust me, you got to work with Matt and his team. They're going to take great care of you. They're going to help get an offer accepted. And they're, you know, recommending strongly because they know it's in the client's best interest. And then it's in turn giving them more future business. So that's a long-winded way of saying, Thomas, like, explain that to the realtor partner, get the realtor partner to give you a chance, and then blow them out of the water and exceed their expectations with how well you perform on a transaction. Help them, you know, get future business. I mean, one thing I know we're doing and I pride myself on is that our follow-up game is absolutely dialed in. I know real estate agents are not following up like we are. So I tell them, don't worry, you don't have to. You meet someone at open house, somebody refers their cousin who might not buy for 3 months, name, email, phone number. We are going to provide so much value to that client that when they are ready to buy, they're going to want to work with us. We're going to remind them, hey, you were referred over by Amer Bally and his team. They know this neighborhood better than anybody. They're going to help you find that 3-bedroom, 2-bath for $400,000, whatever it is. They're going to come right back to you, right? As a realtor, you get that introduction. If you don't have great systems in place, when they are looking to buy in, you know, February of 2023, you're going to have forgot about them 11 months ago. So, anyhow, let's see what other questions we got. I'm going to try to.
And something I want to trickle in on that, Matt, just so in terms of biggest tips for getting new realtor partners is it's 2 simple lines you have to say to a real estate agent that'll just get them invested into wanting to work with you. And the first line is you literally just tell the realtor, which is the truth. It's not much of a line. You tell them the truth. You say, hey, Mr. Realtor, you and I hold a common interest. You want to do more business, and I need you to do more business. I need you to do more business because I get referrals from you. So I'm going to invest my time. I'm going to invest my service. I'm going to invest my energy in making sure you look like the rock star to that real estate agent, or excuse me, you look like the rock star to that client. So that client's going to refer you 5 more clients. And then within those 5 more clients, then you're going to want to work with me, right? It's like the common interest aspect is huge. We hold a common interest and then just be their partner. Don't sell the realtor. Be their partner. Hey, I have this new program with AFR, 0% down, whatever it is. It's like, Mr. Realtor, take this tool that I'm giving you and go and sell it and go and get more business with it, right? It's not like, oh, Amer Bally with the Bally team is so good because he has a 0% down. No. Hey, Mr. ABC Realtor, you're so good. You're going to go ahead and use this product and you're going to go ahead and get more business. And then the final thing is Housing Wire. You know, sometimes Housing Wire is a mess. They don't say the best things. Sometimes Housing Wire is cool. But you're more on the side of how, to Housing Wire and all the publishers that are watching this. But anyways, what it is Housing Wire came out with an article that clients are 5 times more realtors are 5 times more likely to get a referral from their client if their client had an exceptional lending experience. If I do a good job, Mr. Realtor, you're going to get more referrals. That's my kickback. That's my legal kickback to you. I'm going to do a good job for you to get more referrals. That's why you should work with me.
Right. Yeah. I mean, and since you mentioned it, a funny story about kickbacks where, some shady realtors that are just coming up are like, oh, hey, kick me back this or do this. Even the legal stuff where it's like, hey, pay for some of my lead generation or pay for some of that. I'm going to help you go get 2 or 3 more $15,000 commissions per year. Do you want that $45,000? Or do you want me to pay $300 a month in some Zillow leads or some crap that's just going to be a waste of time? I'm not, the smartest dude in the room, but I can tell you that 45,000 is greater than 3,600, right? So forget about asking for these little, kickbacks or asking for this other stuff. Let's help you build a business and let's help you basically present a product to the consumer that's going to result in 10, 20, 30% increase every single year in your business because you're knocking it out of the park for the clients.
Correct.
All right. Jason Carr is asking this question and I don't want to spend too much time on it, but once the file is submitted to underwriting, you as an LO, how hands-on are you? I'll speak for me and my team. And I think it's probably similar to Amer. I'm doing the things I'm good at. And I've got great people in the seats doing things that they're really good at. So operations completely dialed in. And so taking a file from contract to close is in the hands of the people that are very detail oriented, very systems oriented. Here's exactly what we need from title, from the agent, from, homeowners insurance, from the, everybody involved. They're moving all those pieces. If I ever get involved, it's, there's an issue that I need to find a creative way to solve, right? But 98% of the time, like loans aren't that terribly complicated if we've done the work up front. We've done the work up front. They're fully pre-approved. They're going to get to the finish line. The team is handling that, right? And operations folks are generally a different breed with a different skill set than my skill set, to be completely honest.
Which is very true because, I don't know how to calculate income. I probably shouldn't be saying this on a live. I closed over 2,000 loans in my career. You put a tax return in front of me, I have no idea what I'm looking at. All I know is there's a bunch of look at the last line on the 1040, right? So, do you want me to underwrite your file, or do you want me to help you get an accepted offer on the home? I'd rather have me help me get an accepted offer on the home, and then I'm going to have that person that literally gets trained every single day by Denisa. Shout out Denisa, one of the best processors we got on the team. She's incredible at everything she does. You'll have a processor like Denisa who lives and breathes tax returns and fluctuating income and commission income. Is they know that stuff. Those tax liens, those delinquencies, it's that's what they're good at. me and you shouldn't be touching that, man. That's not
right. Yeah. And I mean, I can
good. It's not
yeah, I
because
can
we're too good to do it. It's because we just, at least I just don't know how.
right. Yeah. And a funny story. I'll tell a true story. My number one ops person, Laura, had her first child last year. So she was out. I had to get back into the weeds, and I had to get into pre-approvals and calculate income, stuff that I did in 2014, 15, 16. One, I don't necessarily like to do it. Two, I realized I've got other people on the team that are better at this than me. And so, the way the team is structured now, you've got the very best people handling the parts that they're very good at. Like Amer said, you've got me reaching out to the list side, helping you get an offer accepted. You've got me talking high level to you about, hey, Mr. and Mrs. Client, like if this was me in your position, here's exactly what I would do. So if this is just a general question, like maybe there's some loan officers out there that are doing every single thing from start to finish, right? If they are, the thing that I would be weary of, Jordan, one, what happens when they get sick? What happens when they go on vacation? What happens when XYZ and they're the processor, the loan originator? If they're busy chasing deals and you want them to like update your pre-approval, who's doing that, right? They're doing all the jobs. That's a small operation, which some people can do and some people do it very well. Shout out friggin' Todd Bitter, but that's not how I do it.
Todd Bitter's shout out Todd Bitter, the only man in the country that I know. I'm not gonna lie. I think Todd Bitter is lying to all of us. Like, I love the guy. He's totally lying. There's no way he's closing 30, 40 purchases a month. And if he is, the guy's a freaking animal. I saw him in Vegas, and I looked at him and I said, Todd, there's no way, bro. There's no way. He's like, no, I'm doing it. Sorry, bro.
Yeah, psychopaths. I want none of that. All right, Tamika, thanks for joining. She wants to know about recommending a lender experience with 1031 exchanges. You want to find a 1031 intermediary who the 1031 company is going to hold the money, because when you do a 1031 exchange, the rule is the money can't go from the sale to you and then into a new purchase. It's got to go from sale to the 1031 intermediary and then into the new purchase. Truth be told, like all lenders should be familiar with how that works, and they're not really the person handling that. They're just helping you with the purchase transaction. So you don't necessarily need to find a lender experience with this. In Sacramento, I've got referrals for 1031 exchange intermediaries in my area, but whatever part of the country you're in, contact that company first, and then just work with a lender who's competent. Find a broker. Oh, you know what? This is a great plug. This is a great time to plug. No matter where you're at, go to greatmortgagebroker.com, fill out that form, tell me where you're at, how we can help, and I'll refer you a great one. I've got folks all over the country. You might even be in Michigan. You might get the Bally team if you're lucky.
Greatmortgagebroker.com. This is an awesome website. This is you, Matt?
Bro, I don't know what you've been doing over there, bro, but yeah, somebody goes to there. All you got to do is, a few clicks, and I'm going to connect you with a great broker who's local to you.
Wow, this is awesome, dude.
It's pretty cool, huh?
Anyway,
I kept getting people that wanted to like, hey, I'm trying to do something in Florida. Hey, I'm trying to do something in Tennessee. Hey, I'm trying to do something here. I was like, I should create a landing page where I can help, direct traffic, direct these people to great brokers. And greatmortgagebroker.com is a good one, right?
That domain has to be worth something.
All right. Keep driving until you qualify. It refers to, drive way out of town where prices are low. Dude, this is a good topic. I was talking to a guy down in Southern California, and he was telling me, he's like, dude, I've referred more people to these like small little like suburbs outside of Los Angeles County, Orange County, these places where people, they go to qualify and they just don't know, right? If you've been following somebody who since 2015 is like, don't buy, man. It's the top, man. It's crashing. Don't buy. If you've rented for the last 7 years and listened to that nonsense, you go to buy a house now in some of these places, and your realtor or your lender or both are going to say, listen, at 900,000, you can no longer buy in that neighborhood. You might have to take a drive.
It's crazy because in 2020, I remember when sometimes I wish I could go back to those days when like COVID first hit, how much I would do differently in my career. But it's like, when COVID first hit, and I was thinking, oh man, the housing market's going to crash. I remember I was telling myself that, but I was being strong in front of my clients. And I'm thinking, like if I would have bought property in 2020, I'd be up 20% on every single home I purchased. And a lot of people keep saying, I'll throw some stats to the people that are watching this right now. A lot of the people that are saying, oh, the housing market is going to crash. It's like, how can it crash? There is a 5.4 million home unit shortage in the country. Okay, so supply and demand is through the roof. Supply is really low. In 2008, when the market crashed, supply was through the roof and nobody wanted to buy a home, right? So that's why the supply and demand happened. And it was the last week of January, the MLS is like the realtor stuff, like that's how the realtors track the homes that are listed on the market and all that stuff. It was the last week of January. The report came out. I saw it on MLS from a realtor partner I work with. There are 1.4 million active real estate agents in the country, and there were less than 900,000 homes listed on the market. That means every realtor in the country had less than one home to show their buyer, less than one home to list on the market. How can the market crash? I don't see how it can. The problem that's going to arise, and Matt, maybe you can correct me if I'm wrong, but this is something I strongly believe. Millennials are the new baby boomers, right? The baby boomers were like, they were buying all these homes, right? Now they're getting old and now they're all selling. The baby boomers are now selling their homes, right? These millennials are having a hard time qualifying for homes now, or are going to at least, because when we pre-approved them at a 2.99 no cost. Now it's like you're at a 4.5, your mortgage payment is $200 more per month. That's eating away at your approval amount. So if I pre-approved you for $500,000 in November, you're probably only pre-approved now for $380,000, $390,000 now because the rate has gone up so much, right? Well, you can't. I don't know. Like in Michigan, a $500,000 home, you're living on the top of the mountain overviewing the entire country. in Sacramento, a $500,000 home, you're right next to the dumpster. So like it's a little different over there, but like it's chewing away over here in Michigan. At least it's different. It's I don't see the market crashing. I definitely see it slowing down, but that's just my insight. I'm curious to know how you feel.
Yeah,
about it.
No, I agree with you, and I keep telling folks like I'm bullish on real estate. I love real estate, investor, own multiple properties. I'm rooting for things to slow down too. I've got 80, 90 pre-approved buyers that are looking at homes every weekend, that are submitting offers every weekend. I want it to flatten out. I want it to slow down. A lot of the metrics out there are scary when you're on that side of the fence rooting for things to slow down, because there is this huge supply versus demand imbalance. That demographic of 34 to 36-year-olds, Barry Habib's been talking about it for 2 years. Like if you look at birth rates from 1988, 89, 1990, those people that are, turning 33, 34, 35 over the next few years, those numbers go like straight up, dude. Like more of those people are coming to buy homes. And as much as people want to point at affordability and say like, listen, these folks can't afford. Every single week I'm getting folks, she makes 85,000. He makes 75,000 combined, 160,000. Like they don't have a problem buying a $600,000 house. If it goes up to 650 and the rate goes from 375 to 4.25, they can still qualify. And so, will it be a little bit more of a stretch? Will affordability get stretched? Yes. Will it be so much so that, we see 20% decrease in prices? I don't think so. But like to your point, Amer, I hope it slows down. I hope it flattens out. And I could certainly see that.
And to the people watching this, sorry to cut you off, to the people watching this, understand what we're saying. We hope it slows down. That means we're saying we hope our business slows down. Right. Like we're sitting against what we earn, our living.
Well, yeah. I mean, the funny part is like inventory has shrunk like crazy. And you look at like, I think they just released like the home sales numbers that are up. Like less stuff is for sale and more stuff is selling. That's a clear sign that there is plenty of demand. And people who are like, oh, they're building more than ever, new builds are coming to market. Great, we need it. But there's still enough demand to gobble up all that supply, and it's not going to go from 17 days of inventory to 6 months in Sacramento overnight, right? Like no builder can build that much. And there's, the thing that scares me, Amer, to be completely like transparent, is people are sitting in like 2.75, 2.875, 2.99 mortgages. They've got less incentive to move. You've got people who, for whatever reason, are in a stage of life where it's like, hey, listen, I'd love to downsize, but I'll just stay in this 2,000 square foot house because, moving's a pain in the butt. I'm just going to stay here. Right. Like
My
people
are,
so low. Yeah. People are, the last metric I looked at, like it had ticked above 10 years for like how often people are moving from a house, where it was like 6, 7, 8 years. And it was
7 years. In 2019, it was 7 years. The average American stays in their home.
And so if there's less movement and less people are moving, builders aren't building fast enough. Like we're not going to solve this supply problem anytime soon. Like for somebody who's sitting on the sidelines waiting, what if home prices never go down? What if they flatten out, or it goes 3 to 5%, then 5 to 7? Like what if it just does this incremental increase every year, and 5 years from now, it's 30% more expensive than it is now, but your rate is 5.5. Like, do you really want to like do that and sit, on the rental market where we've seen steady increases since 1988? Like it's a scary thing. Like I have empathy for people where I'm like, listen, buying's not easy. It's less affordable than it was last year and the year before that. I understand that, but you've literally got to pick between two things. Buying is hard and renting is hard. Like which hard do you want? Do you want the hard where you own an appreciating asset? Do you want the hard where you have debt pay down, write off on your taxes, all the positive things that come with home ownership? Or do you want the hard that's rent?
Yeah, exactly. It's a fun market. It's a good time, man. But Matt, I appreciate you for having me on here. Thanks for having me as a part of your show. I was definitely humbled when you reached out to me and you asked me. And then I was honored to be able to have the flyer with my face on it next to yours. I'm like, man, I couldn't wait to sit next to this guy in Vegas. Now we're on the same team.
I know it's 7:00 where you're at. I know you got to run to an appointment. I'm going to stick around. I'm going to answer a few questions for some folks on here, but I definitely appreciate having you on, man. We'll have to get on, and you're like me, man, just speaking the truth, trying to help people. And some people like us, some people don't, but we're doing our thing.
We're starting a new podcast, AB Experience, powered by U Mortgage. It's going to be my pleasure to have you on there too. I would love to have you on the podcast one day as well. So I appreciate you a ton, bro. And let's keep crushing it. And let's just FEM mindset. All right. I don't know if I can cuss on this name. Anthony. All right, bro.
For sure. Yeah, that's fine.
Love you, brother.
I appreciate you coming on. I appreciate your time, man. Take care, brother.
Bye-bye.
Oh, that was fun. Thanks again, Amer, for jumping on here. That was good. I'm going to see. I saw some questions roll in. I want to make sure I add value and answer as many as I can. Corey Brunson, what are the pros and cons of in-house underwriting from a loan officer perspective and a borrower perspective? The first thing that comes to mind, Corey, is in-house underwriting is like a marketing term. It's somebody saying, hey, listen, we've got in-house underwriting. Like, what does that mean? Honestly, what does that mean? Like, you've got somebody who's in the same building you're in and they're underwriting loans for you. I've heard it pitched at some companies or by some lenders saying, listen, we've got in-house team, whatever it is where it's in-house. Like, I can tell you with absolute certainty, my in-house, we do in-house underwriting, right? It's just any reputable mortgage company, mortgage group, mortgage loan originator is going to have some level of initial underwrite done before somebody's pre-approved. I sure hope so, right? Anybody who's cutting corners, just glancing at tax returns and then saying like, yeah, you're good to go, happy home shopping, is doing you a disservice. So any level of operation where you've got a loan officer doing 100+ transactions a year, I sure hope that they've got a team in place. Like, we've got a pre-underwrite team. We've got, a processing team. We've got all that. And most outfits do. I hope. That's my hope. The worst is these big push button get mortgage, or like the one I talked about earlier where better.com, no tax returns, self-employed borrower, supposedly pre-approved and out shopping. Like that's what you want to avoid. But most loan officers are going to have some form of in-house underwriting. All right, Christy, on behalf of consumers, when somebody asks you what are the first steps to getting a home, what do you tell them? I tell them, and I've said this in multiple different ways, getting your finances in order, getting really clear on your budget and having that like completely dialed in. Meaning you go to a loan officer and you get yourself pre-approved, but not just pre-approved. A good loan officer is going to show you exactly what you qualify for and exactly what that looks like. I don't tell somebody you're qualified for a max of 650,000. Here's a letter. Good luck, right? We ask initially, what is their like target purchase price? What are they looking to buy? Okay, we're looking to buy around 500,000 with 5% down. Great. We might do the pre-approval. We know that they could go up to 700,000, but we're not going to, lead with that or probably even talk about it unless it's asked. What we'd rather do is say, here's 450, 500,000 and 550,000 with 5% down. Here's what the payment looks like. Here's what the total cash to close looks like. If you happen to go above, you qualify and could probably get up to 600 or even higher if you wanted to. But based on what you're looking for as a monthly payment, we know that you're probably going to buy in this range. So here's what it looks like. If you find a great deal at 450, here's the monthly payment. 500, 550, give them an Excel spreadsheet where they can edit it and look at 517. They can look at 482. They can look at 525. And by getting really clear on that, what's going to happen is a buyer is going to go from, uncertain to really clear on, okay, I know the neighborhood I want to live in. I know the house in general that I'm looking to buy. Now that we've seen the numbers and we've been pre-approved and we know that if I buy at 500 and I put 5% down, here's my interest rate, here's my monthly payment. We're honestly comfortable up to about 525. Let's get with our realtor now, sit down. We'd like a 3-bedroom, 2-bath. Here's our must-haves. Here's some stuff that we could, live with. Go find that in the 475 to 525 range, right? That client goes and looks at a house. They're going to be ready to write an offer same day because they know the important part, right? Which is what's my monthly payment going to be? What's my total cash to close going to be? So I think that like the first steps to getting a home are that detailed pre-approval. And if for whatever reason they fill out an application, they upload their supporting docs and they're not ready to buy, they're going to get good advice from that lender on what they can do to prepare. Because maybe it's 3 months, 6 months, 12 months out. They need to do things with credit. They need to save more down. Anything, that they need to do to prepare themselves for home ownership is usually going to start with finances. So contact a great loan officer. Oh, greatmortgagebroker.com. It just fit, guys. I'm not trying to sell out or just keep going to that, but it fit right there pretty good. It was like this perfect spot for a commercial. Okay, Harshal. I know no one can predict the future rate, but based on your past experience, what's the rate range you predict for next 4 to 6 months? Asking this to consider long-term rate lock. I think that rates are going to continue to trend upwards. We know that the Fed is either going to do 0.25 or 50 basis points to the Fed funds rate in March. Everything I'm seeing and hearing is more and more with the Fed funds rate being pushed up, like up to 9 in the next 12 months is what I'm hearing, to where the Fed funds rate might be 2 or 2.5%. If the 10-year Treasury goes to 2.5 or 3, and we know that the 30-year mortgage rate is going to be 1.7 to 2% higher than that 10-year Treasury, then we're talking, 4.25 to 5% on the 30-year fixed rate mortgage. Are we 4.5 in 6 months? Probably somewhere in that range. Right now, most of the stuff we're locking is 3.99. if you look at like a rate survey from across the country, which takes everybody, banks and retail and other channels that are, truth be told, more expensive than the broker channel. I think that number is like 4.17 or something as of today. I wouldn't be surprised, Harshal, to see that if I were to bet, and I had to bet in 25 basis point increments on rate, like 4 to 4.25, 4.25 to 4.5, 4.5 to 4.75, 4.75 to 5, 4 to 6 months from now, I bet we're in the 4.5 to 4.75. That's where I think rates will be. Again, like you know and I know, nobody knows for certain, but the way things are headed and the trends and whatnot we're seeing, that's probably where they're headed. 4% with 1 point, 4.37 with no points. I think that's good for a 6-month rate lock. I think that you're going to be better than where it will be 4 or 5 months from now. And if the thing is set to be done in 4 months or set to be done in 5 months, that could always drag out to be 6 months out. So yeah, while looking at these two options, 4 with a point or 4.375 with no point, it's fairly easy in my mind on looking at that break even. And let's say it's a $400,000 loan, right? So we're talking about a $4,000 difference. If the monthly payment difference is $80, $4,000 in cost divided by 80 in savings is 50-month break even. I don't know. I don't know if I do anything that's got higher than a 3 or 4 year break even on point paying up front. Depends on your specific scenario. Depends on how long you're going to stay there. I'm not a big advocate of paying a bunch of points up front. So look at both of those and decide. But either one I think is a good option, truth be told. All right, Fuzzy Bid. You don't think the housing market is going to follow the stock market? Seems housing is always slower and lagging because less liquid. Although the demand side, but already seeing some longer listings. I don't know if I'm seeing the longer listings. I think that, it's inevitable. The stock market has already seen a little bit of damage, right? And in my pea brain, when I think about raising rates in general, how much banks, have to charge when they lend to each other, how much companies can borrow money for, that's going to hurt a bunch of companies, in turn hurt the stock market and the stock value, because these companies are not playing with small amounts of dollars, right? They're borrowing $500 million for a project, and rates, at which they can borrow go from 2% to 3%. Like 1% on $500 million is a lot of money, right? And interest being a cost on the balance sheet or on the profit and loss, like they just went from this much profit to minus the 1% cost of that 500 million that they borrowed. Jason Gardner, it's funny. There's an article written about this, about, any economic uncertainty, any type of thing that goes on where, the short answer to your question is yes. Russia invades Ukraine. There's things going on, politically, economically, that are uncertain like this. It's going to help mortgage rates. Rates are going to come down. But what we've seen so far is there's a bunch of talk about this, and it hasn't really helped rates. So I don't know if I would hold your breath. If anything happens with this Russia-Ukraine thing, it's going to be very minimal help to mortgage interest rates. And what's going to happen is, before you know it, before you blink, things are going to be resolved, and then rates are going to tick up. That's just my guesstimation. Hey, Matt Bittner, thanks for joining. Don't want to skip over this question to tell you that I really don't have a lot of experience with 203K loans, which is, a rehabilitation loan. You buy a house that needs some work. I can definitely point you in the right direction if you go to greatmortgagebroker.com. But 203K loan for I don't know if those things, can you do that on a duplex, triplex, fourplex? I don't know if you can. It's an FHA product. But I think they might be limited to single family. So I'd have to answer that first or get that answered first. All right. Yeah, Harshal, not only do you not benefit from paying the points if you don't stay in that loan for the 50 months or whatever the break even is, but realize that $80 saved in 2027 is $80 in 2027. You spent that 80 in 2022. If we see any sort of inflation numbers like we saw this year, even if they go down and it's 7%, then it's 4%, then it's 2%, it's still like you spent $82,022 that are only worth $62 in 2027. That might have been a little bit of a stretch saying 62, but maybe it's only worth 70 because today's dollars, the future value of money thing. You know what I'm saying? Joey Garessi, great to see you here, brother. Who did I see from Oklahoma City in the All-Star game this weekend? I thought about my buddy Joey Garessi. I know that getting a new line of credit right before a mortgage app or during the approval process is generally a big mistake. How do lenders factor those lines of credit in? If it's just a line of credit that's not like a, like a home equity line of credit on a home, they're going to hit you with a payment, even if there's nothing drawn on it. If you're talking about some sort of like consumer credit card or something like that, then you would just have a letter of explanation. You wouldn't have to necessarily be hit with a payment. So I guess it would depend on what type of line of credit it is. Thanks, Harshal. I appreciate you. I'm going to get a couple more questions in, then I'm going to be done with it. All right, Martin, thanks for joining. This is a great question. Can you explain what a jumbo loan is? A jumbo loan is just a loan once you've gone above the conforming loan limits for your county, you're going to have to take out a jumbo loan. And I'll give you an example. Across the country, 647,200 is the conforming loan limit. So if you buy a house for $650,000 and you put 5% down, whatever that loan amount is, it's below 647,200. I can get you a conventional conforming loan. It's a Fannie Freddie loan, government backed, best interest rates, easy to underwrite, clear guidelines. I'll submit that loan and I can do it at a bazillion different lenders. If you're trying to buy a home in a county where they have no high balance limits, where 647,200 is the limit, and let's say you're buying an $800,000 house and you're putting 10% down. To get that $720,000 loan, we're going to have to go get a jumbo loan. You can't do a conforming loan because you're above that limit. Jumbo loans are going to be a little bit stricter in the debt to income ratio they allow. They might need more reserves. There's just going to be more questions asked, more guidelines, more things that we need to do on the lending side because it's a bigger loan. It's a higher risk loan, right? So that's essentially what a jumbo loan is. And, depending on the county you're in, there's counties in California, you can go all the way up to $970,800, and that's a high balance loan. And you don't have to get a jumbo loan. The reason why I say don't have to get is because a lot of people understand that jumbo is stricter in their guidelines. Sometimes the terms aren't so great. Anybody who looking to put 5% down, if you do that in the jumbo space, it's like really restrictive. The terms aren't so great. And so if you're in a position where you're able to do one of the two, you don't want to have to dot every I, cross every T, fine tooth comb through every single page of every tax return like you're going to get with a jumbo loan, then maybe, you try to get yourself into a conforming loan. But, if you're buying for 1.2 million and you're putting 10 or 20% down, then you're going to have to go jumbo in some circumstances. Oh, here we go. See, this is what I love. Joey, you asked a question about the credit line. I got my buddy Brett, underwriter extraordinaire, just in here, just coming in with the assist. A zero balance line of credit will be more or less ignored unless it's a HELOC on the subject property. Then it must be closed or subordinated. Sweet. Yeah, I'm going to ask this question right alongside you, Joey. If it is, Brett, on the subject property, then it must be closed or subordinated. But if it is subordinated, how are we calculating what we're going to hit them with on a payment? I knew this once upon a time, but let's say they have a $100,000 home equity line where that's their limit, but they don't have anything on it. You know, they've only just opened it and have a $100,000 limit, nothing drawn on it. How do we calculate that payment? And I appreciate you jumping in here, Brett, because this is good, man. I got backup, Joey. I brought underwriting backup tonight. If you guys recognize the name Brett, he was on the live last month sometime. Underwriter extraordinaire. Oh, no payment. It would just count against the loan to value. All right, Joey, that's your answer. You know, you've got a $400,000 first mortgage, $100,000 credit line. The house is worth $800,000. That $100,000 HELOC we've got to use in the combined loan to value, but we wouldn't have to hit you with a payment. That's good to know. I like that. All right. See, collective knowledge right here. I love this. Ashanka answering an earlier question about FHA 203K. So you can get it on a 2 to 4. A couple things to take into consideration is on FHA 2 to 4 unit properties. Yes, you can put 3.5% down on the FHA products, including that 203K construction loan. It's got to pass a self-sustainability test, which in some markets is hard. The self-sustainability test says that if you take the total rents times 75% factor, that has to be more than the PITI payment, principal, interest, taxes, insurance. And if you want an example of that, you've got a fourplex with $1,000 rent per unit. You've got 4,000 in rents. Multiply that by 75. Now you get 3,000. Your total payment can't be higher than 3,000. You know, if you live in a market where those fourplexes cost 600 grand or 700,000 and they're only getting 1,000 a month in rent from each unit, then you're going to run into issues with that self-sustainability test. The 203K loan, that's a whole different animal where you're, you know, doing rehab. If you've got less than 30,000 in rehab, you can do a streamline. If you're doing more than 30,000 and, or you've got walls to move or anything to do with structure, then you got to do the full kit and caboodle. Those things are a little complicated. So make sure you work with a pro who's done a lot of them. All right, Kyle in PA. In 1980, the median home price was $60,000 and the median household's income was $20,000. So only 3x. Currently, it's $410 median home price and $67,000 median income, which is 6x. I wonder if you take 1980's interest rates of 12% and factor that in, what that looks like. Because a $60,000 house with 12% interest versus $410,000 house at 4%. We've gone all the way up to 4, but it's still 4. I bet you it doesn't make those numbers look twice as bad, right? Because right there, it's like, it's twice as bad. It used to be 3x. Now it's 6x. I've actually got a cool 50-year affordability. Let me see if I can get it out. Where for sure in 2020, homes were more affordable by like payment versus income calcs than 1980. As much as people will fight that to the death and say, that's not true. 50-year. See if I can find this quickly. Try to pull up an Excel spreadsheet. Okay. Old people say they had to pay 15% interest in 1988, only had to pay 3x their household income for a home. So if rates don't stay under 4% indefinitely, how can median home prices stay over 400,000? Now I get you, man, and I'm all for opposing views. You're asking questions. This is the best part about people who just want to have a conversation, is I'm not taking it any old way. It's good stuff to look at, right? Like 2020, I've got median income for a family of four at like 78,000, median home price of 270. I know it's gone up since 2020, but I think it's in the 300s for like the nationwide number. So you can look at like wage growth. You can look at the payment as a percent of someone's gross income, and it's like 15%. If you go back to 1980, where the median home price was 55 grand, median income for a family of four was like 17,000. The payment was like 39% of their gross income. Let me, you know what? I don't think you're going to be able to see this if I pull it up. But first, let me give a shout out to my buddy Mike Zuber, because this is his 50-year affordability. And let's see. Since we brought it up, we're looking at like 1980 right here, right? And we've got median home price 55 grand. Interest rate 13.74. What are we using as a down payment? This is 10% down. So we're financing 90%. This is the monthly payment, and this is 17,000 is the median income for a family, and 39.1% of their gross income is their payment, right? And so like in the 80s, this was terrible. 39, 46, 44, 36. And so everyone's got this affordability thing where they're like, oh my gosh, home prices have 6x since then. But when you factor in wage growth and you factor in, like, look here in 05, 06, 07, 08, these numbers are also pretty gnarly. Down payment percent of income. Holy moly. Was I looking at the right line back here? Oh yeah, payment as a percent of their gross. Those years were bad, early 80s. And so then you get to like 2018, 19, 20, where people are like, homes are not affordable. It's crazy. Like the 240 to 255 to 270, as home prices have gone up, wage growth hasn't like necessarily gone away, right? People are making more. So 78,000 as a median income for a family of four versus the 270,000 median home price across the US. 15.9% as a percent of your gross income for your payment is stellar. It's arguably more affordable than it's been almost ever. Now, I'll give you this. We'll go to 2021 and 2022. When these get added to this chart, it gets uglier, right? This might go to 23, 24, 25%. But it's nowhere near as bad as it was 06, 07, 08, and certainly way better than it was back in the 80s, where people are like, look, you could buy a house for 60 grand. All right. Enough beating down that, but I think that it's worth looking at, right? 320 to over 400,000. That's not nationwide. Nationwide, the median home price is in the threes. And it certainly hasn't gone up. Like 320 to 400 would be up 30% in the last 12 months. It's not that wild. I don't know much but I know that. I almost broke out into song right there. I don't know much, but I know I love you. I should definitely not be singing. I should be doing only math and only mortgage. All right. On that note, since I'm glad I chose mortgage and not a singing career, I appreciate everyone who watched. I appreciate everyone who tuned in. Would love to continue that conversation next week, Kyle. And I'm going to try to see what I can do to fill in 21 and 22 on that affordability. Again, shout out to my buddy Mike Zuber. That was something I borrowed from him. I will get permission from him to share that Head Start daycare. Go ahead and send me team at mtmg.com. If he's good with it, I'll share it. But I got it from a buddy, Mike Zuber. I don't want to share without his permission. All right. Thanks, guys, for watching. I appreciate you. Have a good night.